Please. No, like seriously. Okay, guys. This is Brock. It's Tuesday, February 28th, 2012, and we're going to go and start lesson 2. Okay, the first thing I'm going to need you guys to do is go ahead and bring up a Google Chrome webpage or just an internet browser. And I'm just going to go through setting up the chart. I'm going to go ahead and just do this for the first few classes. That way everybody can just get in the habit of it. You might want to go and just write this information down so you have it, so you can just set up these charts. It's going to be easier for you. This entire class, I don't want it to be any longer than about 45 minutes. I just want to get the information across. And as of course you guys know, if you have any questions, you have text, email, Skype, whatever you guys need to understand this. Okay, first website is stockcharts.com. Right there, if you guys can see it. And go ahead and start doing this along the side with me. I don't want you to fall behind. At the end of this video, I'm gonna send you guys. I'm gonna try to get out tonight or early tomorrow morning. I'm gonna send you guys a video of some stocks I'm looking at for the rest of this week. Okay, right here. Right next to the sharp chart on the right here. I want you to go ahead and start. I want you to type in the stock CURIS, but the abbreviation is CRIS right there. Okay, it's running a little slow here. Okay, this is a really good pharmaceutical company. It's just been booming. I mean, I was trading it back here in late November, early November, and I was trading around $3, and it was jumping from about like $3 to about $3.40. Sell out, go back in about $3.15, sell back out, and you can just keep doing that over and over. It's doing great, and then it just shot up. Now it's a fairly expensive stock for me. I usually keep my stocks between the pennies and $3 range. Okay, setting up this chart. The first thing I need you guys to do right here is right next to update, click inspect. Okay, I guess it's going to work when it wants to. Just move on down. Right here where it says range, full quote right here, and price labels. Right there, full quote, price labels. Right here on volume where it says overlay, click separate. Now, if I'm moving too fast for anybody, please just shoot me a message down here on the bottom. Or if you need me to go over something, if you didn't clearly understand, just shoot me a message. Okay. Now we're going to go down here to overlays. The simple moving averages that I covered in lesson 1 is the 50, 200, and 20. So go ahead and set your other simple moving average right here and set this one for 20. Now when you're done with that, we're going to come down to these indicators, RSI, MACD, that's all good. We're going to add one more on here, and we're going to learn about this one also today. It's going to be the Williams %R. And you're just going to scroll down here. It's right there, Williams %R. Okay. Right here, your first indicator, the RSI, go ahead and change that to 10. Your MACD is going to be 6, 13, and 5. And your Williams %R will also be 10. and right here on your RSI, the first indicator where it says position above, it's personal preference. I prefer all mine below. That's just me. Okay, so it should be all set up. When it's all set up, on the very bottom left right here, underneath Williams %R, it says update. Go ahead and click update. And hopefully everyone's screen looks like mine here in a second. It's going to give you a nice, clearer picture. Okay. Alright, just to cover a little bit of lesson 1 and what we reviewed over on lesson 1. Basically, we talked about these simple moving averages, the 20-day, the red one, the 200-day, and the 50-day, the blue one right here. We also covered volume, and I think I went into a little bit about RSI, but I didn't really cover it in depth. We're going to cover that more in depth in this class. We went over MACD, which if you guys remember, I said MACD is going to be your bread and butter. It's going to give you the clearest confirmation lines on when to buy and sell. But of course, you're going to be using RSI and now today Williams %R along with your MACD. It's going to give you a better picture of when to enter and exit. And just to review back over MACD real quick, basically you have a slow line and a fast line. The fast line is the black one, and the slow line is the red one. When the fast line, the black one, crosses above the red one, that's a bullish sign, meaning that the trend is now going to be moving in an upward direction. And as you can see here, it confirmed an upward trend right here. So this would be definitely a buy for me. And as you can see, you could ride the MACD all the way up. Right here at the point, you definitely wanted to get out, but if you didn't, that's okay. You take a little hit, and then you can get out here on the top of the MACD right here. Basically, I mean, you want to stay on the top of the MACD. The best way to do this is set these things called stop losses, in which when you guys have your trading accounts, and when you're trading, you know, you can set stop limits, stop losses. And if you remember what I said about what a stop loss is basically, let's just say I go ahead and buy into a stock at $1, and it goes up to $1.05. I'm probably going to set my stop loss up around maybe $1.01, $1.02. If the stock falls below $1.02 or $1.01, wherever I set my stop loss, it's going to automatically sell out for me. So I really recommend this when you buy into a security. Every single day I'd be moving my stop loss up. That way, when it does do something like this, you're okay. You're in the clear. You know, your stop loss should catch you, and you should still run out of there with some profits. So now moving on. Does anybody up to this point have any questions? Okay. Okay, good. Like I said, of course, these are recording. Lesson 1 will be emailed out to you guys. I'm sorry it's so late. I was having some technical difficulties. It's my first time using a Mac. I'm a PC guy, but I'll definitely get out these videos to you guys, and you'll have them. So anyway, moving on with the lesson here. Okay. Okay, just a little overview about what we're going over today. We're going to go over some candles, some bullish candle patterns, some bearish candle patterns, relative strength index, which is your RSI. I told you I was going to cover more of that in lesson 2, and Williams %R. We're going to learn how to use both of these in congruence with our MACD, and I'm going to paint you guys a really nice picture using the candles and these indicators. So you're going to have a really good grasp here at the end of this lesson. Okay, candlesticks. Candles are a piece of chart that display the high, low, open, and close for security over a specified period of time. There are many trading strategies based on candlestick patterns. Basically, what a candlestick is going to do is it's just going to try to paint you a picture. Unfortunately, a candlestick itself is not going to be efficient enough. I mean, some people do just candlestick trading, but like I said, the more the merrier, but you don't want to overload yourself. But candlesticks, just by looking over them, I'm just going to review a basic candlesticks over here on this lesson because I can go on and on and on candlesticks. What I recommend you guys to do is I'm going to give you guys some websites here, and you can go over some candlesticks yourselves because there's so many candlesticks. The list just goes on. But there's a few important ones that show up many times. Okay, basically this is how it works here. You're gonna have white or clear candlesticks, which is going to represent bullish patterns, and then you're going to have black ones or red ones, which are going to represent the bearish ones. So on an open candle here, on a bearish one, what it's showing is it's going to open here, and throughout the day, these are called here. This is the southern tail, and this is the northern tail, or here they call it upper shadow, lower shadow. Basically, it's just the tails of the stock. It's showing like where the stock went throughout that day. So let's just say 9:30 in the morning, it opens up. I mean, it could fall all the way down here, and then it might end up way down here. At the end of the day, it's going to close out right here though. So a very good, really good idea what a strong bearish candle. I'm sorry, a bullish candle, a white one would be. A nice thick body. As you can see, this is basically a medium range body. You can have a fuller candle in which the body comes way up to here, and the lower part comes way down here, in which you have almost no tail. That's representing a lot of solid, confirmed buys and sells, and that's where the majority of investors are exiting out of their security during that day, or where they are during that day. Now, for the bearish one, the dark one, also is a red one. It's basically just the opposite. It's going to open up here on the top. Throughout the day, it could go a little bit higher, a little bit lower, but during the end of the day, this is where you're going to find the close. So now if you're going to come back to your stock charts here, you're going to understand a little bit more clearly. Right here, here's a good example right here. As you can see, the day before, this is a black chart. It closed out right here, opened up here. Throughout this day, it traded up majority in this range right here. But sometimes it fell down here at about $1.45. Overall, good day. Closed up high. Next day, it opened up, bumped up again. So this is a pretty good signal right here. All bullish. As you can see here on this not so good day, it closed right here at the top. The next day, it gapped down. As you can see, the next day it actually opened down here. And what I'm going to do is I'm going to zoom in real quick. You guys can keep your range where it's at. I'm just doing this so you guys can see it on my screen a little bit better. I'm just going to go and update to a month. Okay, here we go. This is much nicer. Okay. Well, I was talking about gap downs here in a second. I'm going to go and talk about gaps up. Here you have a nice bullish candle. Okay. The next day, it gapped up and it opened way up here. So it closed here at 547. The next day it opened up at 559. That's called a gap up. And I'm gonna go more detailed than what gap up and gap down is. But basically, when you see a gap up trade like this, it's sort of giving the investors a last minute timeout. Like go in and get out of here if you're a buyer. The buyers are over with. They give you that one little edge of boost right there. They gap it up a few pennies. Go in and sell out. You want to go in and sell with strength. And as you can see, this was definitely a sell day. The next day, as you can see here, look, it opened here, gapped up, it opened, sold, and then it closed here. The next day, it gapped up again. It closed right here at 509. No, I'm sorry, 510. and then it opened at 516. So it did a 16 cent. I'm sorry, a 6 cent gap up. And after that gap up, as you can see, it sold again. Now this is usually how it works for a majority of stocks and trades. But as you can see, this day it closed and then it gapped down and then it continued selling. And then here it gapped up and it continued selling. So usually when people say a gap up trade, basically what they're saying is, it's going to gap up, go ahead and sell out with strength, and let the sellers do their job. You never want to fight one of these If you see one of these patterns, it's you probably don't want to be in there. And the way that you can tell is if you guys come down here, you see your MACD right here. The fast line, the black line, crossed below the red line. So if you wouldn't have sold already, well, you should have. I mean, this right here is a confirmed sell. The fast line's moving below the slow line. This is a confirmed sell. So, but honestly, I mean, I would have sold out back here with the MACD's up top. Okay, moving on. Okay, this is just what I was talking about before. White, green, and hollow candles represent an upward movement. Oh, you guys lost me? Okay, is everyone good now? Is everyone online? Okay. Okay, candlesticks continued here. The white, green, hollow candles represent an upward movement for the day, where the bottom of the candle's body is the day's open and the top of the body being the day's close. Basically exactly what I just covered. The red, black, and filled candles represent a downward movement for the day, where the bottom of the candle's body is the day's close and the top of the body being the day's open. Same thing I just talked about right here. And of course, you guys will have these PowerPoint presentations emailed to you, and you can review over these pictures anytime. Okay, just to cover a quick pattern here, the bullish candle patterns. A bullish engulfing pattern is formed when a large white candlestick engulfs the previous day's black candlestick, usually resulting in a trend reversal, which is definitely a bullish sign right here, as you can see. The body of the new bullish candle completely overwhelmed the bearish candle of the previous day, therefore confirming a successful reversal. Okay, these ones are my favorite. I love these morning stars. A morning star, also referred to as a doji, 3-day reversal, consists of a large red candlestick in a defined bearish trend, a gap down, what we just talked about earlier, small-bodied candle, either red or white. 3, a gapped up, large white candlestick that it closes near the center of the first candle's body. And here's a morning star here, and then here's an evening star. This is obviously, if let's just say you buy in, you're riding it up. As soon as you see this evening star here, you see a large body and then you see a small one up here, basically telling you that the trend is losing momentum. Down here, if we had a volume chart, the volume would probably be decreasing, and at this point the buyers would probably be moving out here, probably confirming some sells. Therefore, as you can see, the tails are actually a bit lengthy, therefore showing a lot of inconsistency of where the buyers and sellers are moving throughout the day, confirming if you want to be on the safe side, I'd probably go ahead and sell out. Opposite for the morning star here, you're going down, you see this, you see it's been in a downward trend most of the day or most of the week. and you see one of these showing that the sellers are struggling here with a lot of buying power, you probably want to go in and buy in. There's probably a lot of, make sure the volume's going up, and then go in and ride up. See what happens. Keep a nice tight stop loss, and should be good to go on that one. Okay, bearish candle patterns. We just went over this. The evening star doji, the 3-day reversal, exactly what we just went over. Large white candlestick in a defined bullish trend. A gapped up, small bodied candle, red or black, indicates a strong downward. A gap down, large red candlestick that encloses near the center of the first candle's body. Okay. Basically, the bearish works just the opposite of the bullish here. As you can see, you have a nice green candle here. Good day of strong buying. The next day not so bad. I mean, you see a lot of selling going on, and you see this this widened body here. Definitely time to get out. If you didn't get out here, I get out as soon as you can. Okay, now getting on to the stuff we use with our MACD. The Relative Strength Index, also known short RSI. The Relative Strength Index, or RSI, is a technical momentum indicator that compares recent gains to losses in an attempt to determine overbought or oversold conditions of a security. The RSI should be used to complement other technical indicators, as large quantities of movement can result in exaggerated buy or sell signals, basically resulting in false signals. That's why I always tell you guys you can't go off one indicator alone. I recommend a 3 out of 3. You usually want 3 out of 3 indicators pointing at all buy, but you're not going to always have that. Okay. When an asset is overbought, it is a situation where the high demand has unjustifiably pushed the price levels to beyond its true value. When an asset is oversold, it is in a condition where it has recently experienced a sharp decline so low that it has fallen below its true value, usually as a result of panic selling or market overreacting. Usually a great buying opportunity for investors. Very true. Quick review here. I'm going to go to the chart. I'm going to give you some good RSI things here. Let's cover this right before we go to that, though. Relative Strength Index. Some bullish trends here. And what I recommend is you guys actually write this down when you can. But, of course, these will be emailed to you, and you can look at them anytime you want. Oh, I just messed something up here. There we go. Okay. Above 30 is an early upward trend. Above 50 is a confirmed upward trend. Above 70, early sell signal. Above 90, strong sell signal. Basically saying if it's above 70 and above 90, it's definitely overbought. Probably tipping the top right there. Let me go ahead and give you a good example here real quick before we move on. I'm going to move back down here and get this back up to 3 months so you can see a more widened perspective on the stock here. Okay. And this RSI, as you guys can see, it's moving back and forth. It's not really giving me that great pictures. Not for this stock at least. But let's move down here. Right here, as you can see, the RSI is basically in an upward trend. It's above the 50 line. If you follow through with your MACD here, you can see that it's moving. Because this stock has just been like leveling up the top here. Let's go and look at a different stock. I want to give you guys a good explanation of how RSI really works here. Right here in the symbol area, type in a stock. DRYS, DRYS, and go ahead and click enter. Hopefully this gives us a little bit better picture on RSI and how it works here. As you can see, this stock has been doing amazing here these past few recent months or weeks. Okay, yeah, this is a little bit better here. As you can see here, RSI showing up about 40. A lot of maintenance. It's just maintaining there. It's not drastically moving down or up. Right here, right as soon as it crossed that 50 line right here, probably more than likely confirm going to buy into it. You can do a short squeeze out of it. But as you can see, it kept going. It's toppling 70 right here. So basically, what it's telling you as an investor, if you're already in the security, hey, watch out. Keep an eye on it. It still has potential to move up. But if at any moment it sells, it's giving you the warning. Right here, topping above 80, pushing 80, and definitely up here pushing 88. I would definitely been out right here as soon as I saw an 88 right here. Along with, if you guys come down here, you see your nice little RSI. You move down to your MACD. You see your MACDs. I mean, basically, you're not going to have all that stuff on the right here. All you're going to see is the MACD just pointing up. And since all you see is your MACD pointing up, you can't really tell when your MACD is going to level off. So you basically look right here at this RSI, and you'd see right here it's topping about 88. Right here, you can see that the upward momentum is losing. When it topples below 80, it's moving back down here. It's hitting 70. Especially when it fell below 70 here, that's a confirmed sell. And I have some of the definitions up right here. Okay, the bearish trends of the RSI. Below 90, it's losing steam. Alongside, it's probably going to be losing some volume too. A lot of the buyers are moving out of the security. Breaks below 70, definitely confirmed sell. You should be out of that security by then. Breaks below 50, it's lost its upward trend. I wouldn't even go near the stock anymore. I'd keep it on my watch list, to see when the RSI might be rebounding back up. But as far as buying, no time to buy right now. Breaks below 30, begin to look for a possible entry right here. This is exactly what I was just talking about. Now, the reason that this is very important, this is going to help you out a lot, is in lesson 1 I covered some information about this link called Stock Fetcher. And I'm just going to go to it real quick. www.stockfetcher.com. Now, StockFetcher does have a free service in which you can just use what they give you. I personally pay $7.99, I believe it is, a month. Not very expensive, but this is great. This pulls out a lot of winners in a single day. Basically, what you can do with StockFetcher is you can screen your stocks to the way that you like them, and you can use, of course, RSI. We can look at, let's just say we want to look at stocks where the RSI is falling below 30, in which we're now hunting for a nice little opening position to go and enter into security. I'm gonna go to my filters here, and I'm gonna hold on. Let me just sign in real quick. I'm going to give you guys an idea how to set this up. And of course, maybe one day I'm just going to go in and set a one class only to Stock Fetcher. That's going to be a little bit later on. I know a lot of you guys are just now getting into trading and learning about the stock market. So okay, invalid username or password. Well, you know what, guys? I really got to get this right now. But this is email with Yahoo. And what StockFetcher does is every single day, after you set up some of your filters, it emails you the filters that you've chosen, and it'll tell you what the percentage gains are. Now, I'm going to give you guys some of these filters, and I'll email them to you. And maybe you guys like mine, or maybe you want to edit it your own way and set it up how you like it. And I mean, I'm going to show you some right here. I'm logging into my email, and I have a few stocks on here that had over 120% gain today. over 50% gains, over 60% gains, over 20%. Some only 5%. A lot of gainers though. See, there's money to be made out there, definitely. You just got to find it. Here, I'm going to show you exactly what I'm talking about here in a second. Okay, right here, Stock Fetcher Daily Email, right here. This is the one that they sent me today. Okay, wow, look at these. Look at this one, 161% change today. And this was in my filter. My stock filter, I labeled it as increasing close. It was up around, 4 pennies, 5 pennies. I mean, bought a few thousand shares right there. I mean, you'd be sitting really nice right now. Moving down the list, what I really look for, as you can see, one thing I love about Stock Fetcher is that the first thing it does is it puts your stocks in order of increasing volume. And of course, we always want a really abundant amount of volume. We want an abundant amount of volume showing a lot of buyers and sellers, showing some momentum. So if you have a lot of volume and it's selling, it's probably showing that there's a lot of sellers that day. So anyway, moving on. Right here we have a nice little 26% gain off a stock that was only 31 cents. Now, this filter is fit to my criteria, in which it's only going to filter me stocks between pennies and $3. So that's why, as you can see, if you're a little bit less risky trader and you want to go into something that's around a few dollars here, here's some for about $2.30. Here's a really nice one I like, MBY, $1.59, made a 30% gain today. So what I do here, basically when I'm screening for some stocks, let's just say, okay, I like MBY. I don't really like the volume. That's not a lot of momentum rolling through there, but let's just say I want to check it out anyway. So MBY, just going to go ahead and go to my stock charts here. I'm going to type in MBY. And I'm just gonna study it. What I learned, my indicators. I'm gonna trust in my indicators, and I'm gonna trust in myself. You're never gonna get 100% clear to look for. I personally probably would not have bought in this stock. This is because my personal trading habits are, and how I like to trade actually, is based on consistency. In this stock, I don't see very much consistency at all. Overall upward trend, I like that. That's nice. The MACD looks really, really ruggish. It's a lot of moving around. The RSI is moving around a lot, not really giving me some clear signals. You'd definitely be taking a chance on a stock like this. Let's go back here to my email. Let me look at another stock here. One with a little bit higher volume. Here we go, ARRY. Only made a 3% gain today. That's all right, but it's flowing a lot of volume here, and it's up in a few dollars range. So I'm going to go and look at that, ARRY. Okay, definitely not for me. Absolutely not for me. No volume whatsoever. I mean, as you can see back here before February, I mean, nobody was even selling the stock. Look at this huge gap down. Of course, if you were going off your indicators, see your RSI showing completely overbought, your MACD's topping off, you should have sold here. If you did not sell here and you fell down here and you're crying about it the next day, this is your own fault. What this means is you probably got a little bit greedy and you were trying to hang on to it, seeing if it's going to go higher. You might have gotten lazy and not played your stop loss on it, and the joke's on you there. That was coming forth. But back here, your MACD is looking pretty nice. It just crossed over. Definitely confirmed buy. I probably wouldn't throw too many shares in here, especially if I don't know anything about the stock. Now, as you know, there's two ways to buy into a security. There's one, there's indicators, and two, there's news. News is great. News is great if you have the information, but guess what? By the time you have information, everybody else has information. So you're probably going to miss it, you know? This is why I trade personally off, not off news and gossip. I trade mainly off my indicators. Let's just go back to the lesson real quick. The last thing I want to discuss with you is Williams percent R. And basically the Williams percent R and the RSI are basically the same exact thing. It's gonna be telling you the same thing. When it's up here in the negative 10, negative 20, negative 5 range, saying you might want to get out. It's definitely topping up here. Below 50, and it's shooting up here, as you can see down here. Definitely showing an upward momentum. Go ahead and buy in. Now, for this stock for tomorrow, I'd keep an eye on it. If you don't want to enter into it, what I do like about it is the RSI is moving up here. As you can see, the RSI is moving right here at 62. You got a little bit of room before it hits 70. The MACD looks amazing. Look, your fast line just crossed your slow line, confirming an upward trend and a buy. But, and here's what I'm talking about: your Williams percent R, showing that the stock is heavily overbought right now. This is where the risk comes in. This is where you're not really sure what's going to be happening today. What I do like is that it's got a good bit of volume for this particular stock. Now, people, some people say, well, how do you know what is good volume? Some stocks they'll be like, hey Brock, this stock has 80 million volume. Well, yeah, that sounds like a lot of volume at first, but 80 million, but what's its average volume? You have to compare it to something. Same as saying like, oh, this company makes $1 billion. It must be doing great. Well, no, not necessarily. What if last year its net profit was $3 billion and this year is only $1 billion? Obviously not doing too hot. So you always need to compare it to something. Overall, definitely on the watch list. I just take a look at it. If it's moving up tomorrow, I might buy in for a short trade. I'd keep a tight stop loss on it though. You never want to get into one of these positions, but this is why you guys know this, so you don't. Okay, so moving on. Last thing, Williams percent R. Let me just go ahead and go over that real quickly. I see we got a message down here. Okay. Okay, Williams percent R. The Williams percent R is a technical momentum indicator measuring overbought and oversold conditions by comparing the asset's close to the high-low range over a certain period of time. Usually 14 days. However, I personally prefer a 10-day time period because it better fits my trading style. I'm more of a quick in and out kind of trader. I like those indicators to give me quick responses. A 14 days, it's going to give you a more of a clearer, more crisp signal. But what you risk with that is you don't want it too late. You don't want it so confirmed that it's already up and going. You want it just right. I personally prefer 10, and as you guys can see on your stock charts, that's how I set it up. Later on, when you guys become more experienced, you can move it to your personal trading the patterns, however you like to trade. This is more me though. I really like this, and especially with the MACD set at 613.5. But we went over on MACD settings on the first lesson. So that is all for lesson 2. Lesson 3 will be next Tuesday at 7 p.m. like usual. Next Tuesday being March 6th. So if you guys, I know some of you guys are fairly new traders. If you guys need help setting up a TD Ameritrade account, an E-Trade account, whatever kind of trading account, let me know. Like I said, here I'm going to come back to Oh, last thing, guys. I'm sorry. I wanted to show you Stock Fetcher. I got to show you this stuff. Let me show you this stuff real quick. Take about 5 minutes of your time. Hold on. Let me just get him to send my information to me real quick. Obviously, I'll have to change it after this. Now you guys are going to know my email, password, all that good stuff. Stock Fetcher password. Okay. Oh, listen, I don't want to keep you guys held up, but hold on. They have some pretty good examples here. I wanted to show you my personal ones, but what I can do is I can email them to you, and that way, and then you can of course adjust them to the way that you like them. Now, for example, for today we learned about RSI. Great tool to use. Here they're giving you a little example. RSI 15 crossed above 20, 30, 40, 50. You can set out whatever number you want. Let's just look at the RSI crossed above 15 here. Or I'm sorry, 30. Okay. Oh, okay. It's 895 a month. I'm sorry. As you can see, it actually looks much better than this when you're actually paying for the service. And of course, see, it's giving me stocks in the range of $5, $40. Nothing that I'm too particularly interested in. But of course, if you're paying for this service, you can adjust it just the way that you like. None of these I particularly like. This right here, JBLU, JetBlue Air, whatever this stock is. This is it's bouncing off the 30 here, going back up, probably back up in an upward momentum. What I'm gonna do in lesson 3 is I'm gonna cover Stock Fetcher in depth, and I'm gonna go through each one of my filters, why I set it at that specific thing. As you can see, it's been working out for me pretty nicely through my emails that I've been making some consistent gains on here. Give you a peek at it real quick here again. Here's a nice one. PURE at a 16% gain is only 42 cents. So even if you're a trader with only a few $100s to invest, you can still go a long way with this kind of trading. So yeah, sorry about that, guys. I'm definitely going to get you more on lesson 3 on the Stock Fetcher. Okay, that concludes lesson 3. I'm going to go ahead and stop recording here. Okay, so you guys have a good one.